Welcome back to the channel, guys. I hope you're having an amazing day wherever you are around this beautiful planet of ours. Week has ended in cryptocurrency. Let's update the bullish case and bearish case for Bitcoin and of course cryptocurrencies based on this end of week data and what we can expect for this next week. And seeing as it's the end of the month, let's start to think about what we may see in September. So make sure you've smashed the likes and subscribe. Follow along because we are updating this obviously every day, but in terms of the more macro analysis, the weeklies and the monthlies, this is also happening on a very regular basis. And this was the video going back to the 6th of August, looking at August and September being some of the worst months for cryptocurrency. Now this didn't sit too well with a lot of people, but it has unfortunately, or fortunately, whichever way you look at the market, played out to a T, just like the time analysis has worked very, very well. So like I said, make sure you're following along so you can get an update of what is happening. Subscribe, bell notification, you know the things down there, the YouTube algo stuff. Otherwise, the headlines can be a little bit of a trigger for some people if they're not following along with the analysis. And what I'm using here is Gann analysis, looking at timing and price. And of course, we check out pattern as well based on some Wyckoff analysis as well. So this is just not made up mumbo jumbo that I've done, in the last several weeks or months. This is stuff that is based on over 100 years of data from Richard Wyckoff and William Gann. Okay, so this is what we're looking at today. The video there was on the 6th, so right on this candle, basically the same price as it was on August 1st, and the market was heading up. Remember, we did not have any of this data there, so people were really expecting this market to come up, break 26, 28, maybe even get to 35,000 because that's where the market had left off from before the dump in June. We got there in May and we were all hopeful of higher prices in August. Some of the data had said August was going to be up, but what I had looked at and presented in this video here was that August was potentially going to be a difficult month. If it wasn't down, then it's going to be choppy. And September was also going to be a little choppy, potentially a little further down, just based on the last 12 years of history on Bitcoin. And some people didn't like the sound of that. So far, this is what we have seen. We've seen August to be choppy. It ran up a little from 22 to 25, came back down. We got the first dump on the 19th. That was 10%. Tried to crawl back for that last 1, 2, 3, 4, 5, 6, 7 days before it then dumped on Friday a few days ago and got that capitulation lower. And now we've just seen the market trend down over the weekend to lower prices here and actually touching $19,500. So if August is playing out like we're expecting it to with this worst case scenario, this choppy, churny type of environment, maybe September is also going to follow suit based on historical data. Now I'm going to do an update of our monthly analysis in a few days' time. I'm currently in Greece. I'm about to head over to Thailand tomorrow, so we'll be traveling. Stick with us. There's going to be a new video coming out really, really soon on the more macro picture. And this is especially helpful if we're looking at dollar cost averaging into Bitcoin, potentially Ethereum, and keeping ourselves safe from DCAing into altcoins. That goes for everything else, absolutely everything else. You name it, throw that into the DCA bag. I'm trying to stay safe from that, and I hope you are too, by not getting destroyed by DCAing into altcoins. This is going to come later in the cycle, but for now, Bitcoin is the main player, with Ethereum potentially also there as well. So this week, what are we looking for? Well, so far we've seen the dump down. I'm going to give a best case, worst case, a bullish case, bearish case. But before I do, our free newsletter is coming out this week. There's a link in the top of the video description if you want to join that list over there and get that emailed out to you on Wednesday, absolutely free. Just check it out down below. There's Bitcoin, cryptos, real estate, which is stuff that Michael and I also invest in for our long-term holds, our portfolios, what we're doing in terms of our personal portfolios, and of course, stock market data as well to give a macro view of what's going on in the economy out there, because basically all we hear is everything is about to explode. Obviously, if you're here on the channel, you see a different side to the market. It's basically a real-time investor's side to the market, what I'm doing with my cash and my long-term holds. So link to this is in the top of the video description. This week for Bitcoin, we are looking at the following. Now, there's a lot more lines on the chart, so bear with me. We'll get rid of this and this so it's cleaner. Remember our Wyckoff flip above the 19th. So that's for the short-term bullishness to attempt the 25K again. Unless we get there, I don't think we're going to really get to that 25. Obviously, high prices mean potentially higher prices, but the point is the support and resistance levels and the market sentiment. This bar is especially important. So the prices, short term, maybe we see that little bounce back. Remember what I was talking about in this video here. Not a good August is ahead and potentially for September. However, we have seen that downside. So generally, we attempt a little correction, a little bounce back to the upside. If the 19.5 holds, then we look towards, remember, surprise, surprise, our old $20,700 level. So that comes out at the 50% of this current swing. So the top here on the 24th down to the low on the 28th, 20,700 lines up again. We are coming together with another price cluster. So the price clusters tend to be significant support or resistance, obviously the flip. And the 20,700 is something that we've been following since June. Now we've taken it off in recent times because the market was up and it just wasn't as relevant. But now that it's come back down, slammed on it on the 19th, held up just at the 50%, and then of course slammed straight through it. It's a really good number to be watching. So best case scenario, we come up for a bounce to 20,700. If we see some strong sell-offs from that point, I dare say we go a lot lower and come back to the 18.5. But 20,700 is a key test, then 21,400, then 21,900, call it 22. So the three numbers again, 20.7, 21.4, and 22. They are the key levels so far for this market for Bitcoin to come back this week and at least give us some sort of bullish hope that we can attempt to retest the 23.2 in order to get that push to the next Wyckoff bullish flip, which is about 26.9. Now, with all those key support and resistance levels above, it leads us to think that there is more chance of the market falling. We have to stick with the momentum here. The energy is to the downside, the trend is down, therefore we can't expect the market just to flip bullish without giving us some bullish signals. So the best case scenario, we take out each of those levels and start to form a base above 21.9, call it 22K, and then that sets us up for a September, which is also potentially choppy and churny, which again leans back to the analysis that we're looking at here in early August based on the past 12 years of data, being that August and September are going to be the most tricky times ahead. And that clearly just means DCAing might be the easiest part, because trading is going to be quite tough with a lot of fake out signals. DCAing just leans towards let's buy under particular levels like we've looked at under that 20K level based on other 4-year cycle data. Again, more update videos will be coming on that. But at least if you have that broader outlook, then this doesn't become so difficult. But if you've got that shorter term outlook and then the hope, just the big hopes based on all the macro info that is set to come out on the 13th of September, the 21st of September, like we just saw last week with the Jackson Hole Symposium, you name it, any number of these macroeconomic events, this is just a churny, choppy period of the market. So without a clear plan, it's going to be a lot more difficult to trade. Longer term outlooks, those videos are coming this week and it is looking quite good. So make sure you've subscribed and like so you see this content pop up in your newsfeed. That's the bullish case scenario. To the downside, of course, it's a much easier path towards the downside because we're already in a downtrend. So if we don't get that close above 20.7 and then of course the 50% at 21.4, then it looks like we'll come up for a retest somewhere around that 20.6, 20.7 before fading again and testing the 8.5, eventually 7.5, and then lower prices. Now, the lower prices that I'm looking out for here, this could sound quite ugly, but we just have to respect the data that's on the charts, what the smart money is doing, where the buyers and the sellers are. First level cleanly is 17.5K. Obviously, that is the June low. We've got to respect that. The first highest swing low was 18.6, so around that 18.6 to 17.5. There's about a $1,000 window in there. If there's wicks in there, but closes above 18.6, we're looking good. Anything closing within that zone between 17.5, 18.6, not so good. More macro look in terms of the weekly and then the monthly. We'll get to that in future videos, but in terms of the weekly today, downside, we've got to respect this little zone that the market built up to before the blowout into 2021. You can see the high here was at approximately 16K. That was also lower swing tops back in the start of the bear market. So you can see these candles back here at about the highs of 16.2, 17, around that 16K level. That is also another clean level for the downside should this momentum continue on into September. And then the next levels, surprise, surprise, are that previous top in June of 2019 when that market went on that little stellar bull run within the bear market. So we've got a couple of levels here, 14, 16K, 17.5, and then of course the 18.6. So the immediate level is any wicks in this zone of 17.5 to 18.6, not so bad with closes above 18.6, but anything under that 17.5, then we're looking between 14 and 16K. Now I want to throw a lot of hopium on the fire here. You know, we've been talking about a lot of downside, lower prices. The hopium is that we're coming towards the end of it. I know you've heard that heaps of times before. However, remember this is the video that we put up in February calling for lower prices and the timing, which is the most important, not just what prices are going to be, it's the timing. If we get the timing somewhat right, then you're going to know the price is going to be in approximately this zone around that time. And that's all we're trying to do is give us a broad idea, a bit of a roadmap moving forward. We don't need exact prices and we don't need exact times. It's just a roadmap, approximate areas for buying, approximate areas for selling, because at the end of the day, you're just trying to make a chunk of money out of the middle. You're not here to buy the exact low and sell the exact top. The most difficult part as an investor or trader is just the time in between that potential top, like here that happened in February, and the next top, which is basically the same price in October, 8 months later. You got to sit through all of that if you're trading Bitcoin. And it's that mindset that gets you really screwed up. So try to put the mindset aside, the ego of trying to catch the bottom. If we get a timing zone of time and price, that's all we need here. And we've looked at this on the channel before in terms of a price zone. And we know that timing zone is coming up towards the end of this year, Q3, Q4. That's what we're looking for at this stage. And it's in the price zone. We get underneath 19K, then we go back into our DCA price zone, which is proven over the last 3 cycles to be very, very fruitful in the long run. So right now, we are just about to sit back into that zone. This is our cycle buy zones. And I know some of you guys are looking at the fear and greed plan as well. Well, looking at the fear and greed, we are still sitting above those levels, but we had a lot of fear and greed purchasing back here in the lows of June, and the market has since bounced out from that point. So it's going to depend on which plan you're looking at and which plan you have back tested, which one works best for you. But a lot of these are looking very good for some of the best buy opportunities, but you've got to be patient, like very, very patient, months and months ahead for Bitcoin. Then when we get the breakout, that's when we can start to look for altcoins to be flogging off some of that coin, that stable coin, that Bitcoin, to try and make more Bitcoin and cash or stable coins, because that's the time, not now, but that's the time when we can make some quick money on altcoins in longer trading swings rather than try to DCA on those things right now. The signals are not there, in my opinion, in my analysis, to be buying alts. We'll get to that when the time comes, but I think that's a little while off at this point. As for ETH, we are approaching that merge, but the price is still down. We got the 5 weeks up. We've had the 2 weeks down. This is something that we've been tracking pretty well now on the channel for many, many weeks now, looking at some of those macro moves and where it could be rejected based on a lot of timing analysis. ETH is at 2 down. We're bang on the 50% zone in terms of price on the weekly macro here. Let's go to the low to the high, 1455. The market is basically holding right up at that point right now, 1446. So provided we stay above sort of 12 to 1500 within that zone, we could be setting up for another higher low. Now, leading into the merge, key thing here that I've been mentioning to our members at TIA is to watch where the market moves up next. There will be some more emphasis on the merge. There's going to be a lot of drive and bullishness and all sorts, but if you're not watching a price chart, you could get swept away in the emotion again leading up to that event. The idea here is there will be moves up, but if the price doesn't go above the previous price, that's telling you that the smart money doesn't want ETH. They don't want it regardless of what some Twitter folks are telling us about the merge. This is what it looks like on a chart. Buy now, ETH merge is coming, that's the push up. ETH merge date, well, we're still out here. People are just trying to jump on the trend earlier and earlier, taking profits when they can and then dumping it before the event. Obviously, we still have about 3 weeks to go. Let's see what happens. Even if this price comes back up to 2K, to me, that is a failed news event because we've already seen 2K. The price needs to go beyond that and a lot further beyond that and then hold above that level for the ETH merge to be as strong and as bullish as what they have been saying within this particular cycle. Later down the track, different story, but if you're still within a bear market cycle, for it to break out of the cycle, it really needs a lot thrown into it. It can happen, I'm not saying it can't, but be very careful of the news calls about ETH being the biggest, greatest thing ever. And then when the event comes out, the whole buy the rumor, sell the news type of event. And lastly, a look at ETH BTC on our sponsors here, MEXC Global. All English speaking users can get onto MEXC, $1,000 to sign up bonuses. Links are in the top of the video description. They have over 1,500 spot coins to be traded there as well. Spot, okay? You don't need to get swept away in the futures. Stay cool out there. ETH BTC is holding up relatively well in comparison to ETH USD. Of course, this is ETH measured against the Bitcoin value. So this might have some legs during the lead up to the merge against Bitcoin, of course, because especially if Bitcoin is dumping and this is holding up, that's a good sign. In the weekly sense here that we're on, the weekly chart, we're still above 6.5% and still above 7.3%. So that's where this yellow line is at the top here. So provided, I think it stays in this upper zone here above 6.5%, we could still be looking at a stronger ETH versus BTC, at least in the coming weeks and potentially into September. Stay tuned to the channel and of course hit up the Investor Accelerator free newsletter, link in the top of the video description. We're going to update what's happening in September, and then this is going to follow into the 4-year cycle analysis of Bitcoin bottoms, lows for cryptocurrency. So subscribe, bell notification icon, easiest way to get the notifications, and of course like the video up. See you guys at the next one, or on Instagram for some Q&As, of course, along with Twitter. Links in the video description. Till next time, peace out.